Hi there, welcome back to Dukascopy TV. I'm Ben Jones. It's Wednesday, and alongside me to discuss his forecasts for the euro-dollar pair is Camille Amin from Caxton FX. Camille, it's a pleasure to have you on the line once again. Can you begin by discussing for us your 1 month forecast for this pair?
So we fully expect the next month to be a period of uncertainty as market participants try to weigh up the impact that the most recent rates cut we've had in August will have on economic recovery in the Eurozone, as well as the implications that the asset purchase programme, which is scheduled to be introduced in October, will also have on the euro. We expect pressure to remain on the ECB to continue supporting the economy, but with Draghi having warned that there are limits to what the ECB can do to spur growth, unless its efforts are matched by economic reforms aimed at boosting growth. It will be interesting to see whether this raises further questions about where the Eurozone economy is heading and whether or not we will see a further drop in confidence on the back of this. With regard to the US, we expect the Fed to maintain a dovish tone and data to continue playing a big part in the role in how much price action we do see moving forward. We have some GDP figures out at the end of the week, and they're currently forecasted to increase on a monthly basis and an annualized basis, so this should offer some firm support. Optimism regarding an earlier than expected interest rate hike in the US has started pricing into the US dollar markets, and we expect this to remain as long as data continues to remain consistent.
Now, you predict the pair to be trading at 125 in 3 months' time. Why is that?
So over the next 3 months, we'll have a better indication of the impact that the latest rates cut has had on growth and inflation in the Eurozone. And with the asset-backed security program also expected to be well underway, it will be interesting to see how market participants react on the back of that. Data out of the Eurozone hasn't had much of an impact on the currency over the last few months as uncertainties weighed in, but we expect this to change over the course of the next 3 months. ECB President Draghi has signalled just on Monday, as he testified before the European Economic and Monetary Committee, that the central bank could beef up its scale of asset purchase program if inflationary pressures remain. From a dollar perspective, it will be interesting to see whether data has continued supporting the level that the currency has been trading at. This has been the case over the last few months, so we expect that to continue.
And finally, why do you see this pair trading at 120 a year from today?
So this is quite a difficult one. With there's so much happening in the interim. It's difficult to know where both economies will be in the next 12 months. But it's almost guaranteed that the US economy will be close to being back to the level that it was prior to the 08-09 crisis. Hopefully over the next 12 months. Odds that the central bank would increase its benchmark interest rate to at least 0.5% by July next year have been pushed up to 78% from 73% at the end of last month. We therefore do expect to see the first rate hike within the next 12 months, and that's partly the reason why we're forecasting such a drop in the rate. The key to getting the Eurozone economy back on track is trying to install some confidence back among consumers. A pickup in consumer spending has helped avoid a contraction in the Eurozone economy over the past few months. And if this continues, we could see added support for the recovery path that the Eurozone region is currently embarking on. And also, we've had geopolitical tensions have weighed in quite heavily on the Eurozone and also growth since the start of the year. And if these geopolitical tensions should be resolved within this time period, so that should also remove some of the uncertainty that we're seeing currently priced into the market.
Camille, thank you very much for joining us on the line again. That's all we have time for. Thanks for watching, and do make sure you keep clicking back to Dukascopy TV, as we'll be bringing you plenty more updates and exclusive interviews. Bye for now.